Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is January 22nd, 2018. I'm going to revisit sugar tonight with the ETF being CANE, C-A-N-E. We've got the short intermediate to the downside as far as the trends. We've got kind of a mixed bag here with the long-term trend where it's trying to figure out a bottom if it's able. But we have the technicals, which are still negative, and we've got a mixed bag here with the seasonals headed a little bit higher. So I want to point out a couple of things here so you see what is taking place with the sell-off that we've been having in sugar for the month and how we've been playing this and what is basically taking place right now. You can see that there's a support gap in the trading action to sugar, and this is a kind of reminder of something that I talked about back on the 13th of this month, when we were talking about the fact that there was some support gap to the market. Although there was a tremendous amount of support to the market, there were some gaps to it, and we actually did break back below there. And at the time, we were actually short, which it actually turned out well for us. If we take a look at a couple things that are popping up now, we're getting some more signals here that are trying to tell us that a bottom is being formed here, but this is on a short-term basis. So I want you to be aware of what's actually taking place here with sugar. So we just recently had a surge low for profit taking, and we have today a pop low that occurred. And typically this is a pretty good signal to the market, but there's other things that are taking place here, so I just want to full disclosure, kind of let you know everything that's taken place here. Let me start off with the elastic level and give you an idea that the market had been extraordinarily extreme oversold, and it's now backing up a little bit, where we have two sugars. We have sugar number 11, which is domestic, and then we have London sugar, which is sugar number 5. You can see that London sugar was in the oversold condition, and you can see that domestic sugar is right on the border. It's coming back into some form of normalcy, even though just recently it had been extremely oversold. I've got some tendencies here for extreme oversold phases. Now, neither of the London sugar or domestic sugar are in those phases, but they had been the latter part of last week. And I just want to point out that when they get into these conditions, this again is domestic sugar, and we've got London sugar, both of which are in the 2.5% time. Do we actually spend any real time in the extreme oversold condition? So it is unusual. So the fact that we had been and we're bouncing back from there, we've got the patterns, the pro alerts that are popping up here, where we had the pop low and just recently the surge low that occurred. They are telling us that the market had gotten a little extended to the downside. Let me take a break here and just kind of show you, this is daily bars. These are for the patterns. You can see on the 19th that we had this profit taking surge low, and this little green dot which popped up today is telling us that there's a pop low that's occurring in the market. Just recently we had a pop low that occurred in the market back on the 13th of December. The market meandered a little bit, but not really doing too much, and then it had a nice little pop to the market. That's what it's named after, because you'd expect a pop to the market. So that actually did occur today. That's the good news for the longs. The negative for the longs, if we can take a look here, is that the market had been extreme to the low side. That's what we're looking at in the value chart indicator. We've got some conditions that are pointing to, on the elastic side, telling us that the market had based a little bit, but there's really not a lot of support to the market right now. So we're in a point where the market could continue to sell off. I'm going to flip back to the website and point out that right now The systems are still short the market. We've got a 45-minute, another 45-minute, and a daily bar, each of which is short the market. So 3 separate systems, a trend-based and 2 swings that are pointing, are still feeling that there's more downside potential. And if we look at the seasonal tendencies on the 5-year chart for sugar, that there is still a little more downside potential here on the 5-year, which is counter to what is actually taking place in the 10-year, where the 10-year is basically telling us that the market's going to meander until, I'll just call it March 1st. It's a little bit before, but essentially March 1st. If we look at the 5 years, it's still pointing to a sell-off in March. So there could be a little bit of a hiatus here on the short side. The systems are still short, but no matter what kind of a bounce we have, whether there's a continue to the downside and then a surge into to March on the 5 years, or there's a meandering sideways with a sell-off into March and then beyond, that just be cautious with sugar. We don't really want to see, or we won't probably see any type of real surge until later in the year, in around June or so. So whatever pop that we're seeing as far as that low and that surge low could be short-lived. I also want to point out that it has been a tremendous move here in the market, where we've actually got a listing of all the different markets. This is updated as of Friday, last Friday. We'll update things this evening once we get clean numbers. And you can see that lumber has done very well this month, and natural gas has done very well. But at the very, very bottom, we have London sugar and domestic sugar pulling up the rear, where they're the worst performers of all 40 markets that we actually track. You can see that domestic sugar, is down 12.6% as of Friday. Now, the other thing that's interesting is we also keep tallies of the best movements in sugar, and we also do one for obviously the worst performing months. The worst performing months range between down 21% and down 13.3%. We're right now currently down 12.6%. So over the last 14 years, this month is close to one of the worst months that we've seen in sugar. Worst as far as sell-offs. If you're short like we are, that's not bad. That's actually good. But the reality is that we're coming into a phase where, if we take a look at the top 10, we're very close to being in that top 10 position. Now, the way that we're going to be playing this is that the systems are still short, as I pointed out. But I do want to forewarn you that we are getting some early signals here of a bit of a bounce to the market. And if we get that, that's fantastic. Maybe the systems will unwind themselves, maybe they won't. So you really want to be following the systems. But I do want to point out that, again, with sugar, that we could still see a slow meandering a little bit to the downside, and then we'd have a little pop into March, and then that sell-off, as I mentioned. The major sell-off is going to be coming soon. So any little pop that we get to the upside is going to be most likely short-lived. We'll see how things kind of play out, and any profits that will be made on the long side, should the market head higher, we'd want to be wary of that coming into the March period. And that's both for the 10-year. I'll pull up a 5, 10, and 15 year, and you'll see that they all 3 time frames, they all peak in and around the early part of March. This grayish area shows all of March, so you can see that at the beginning of March, in all of the time frames, it really does start to sell off, and they all have a crescendo effect into the early part of June. So bear that in mind, that any pop that we do get in the market, I'm assuming that the short-term traders are going to jump in and jump back out. That's what obviously our systems are talking about. But for the longer-term traders, just beware that any little pop in the market could be short-lived, and that the shorts will probably take over again coming into March. And on that note, I want to point out that Some of you will be noticing that we're going to start to introduce more daily and weekly systems into the mixture for all of our systems. We've been getting some feedback that the short-term systems are too short-term for certain people to track, and so we're going to start to introduce more daily and weekly systems into the mixture. Coming into probably the next 2 weeks or so, we're doing a lot of testing and making sure that that the systems are stable and consistent as all of our systems are, and we want to make sure without a doubt that we're introducing systems into the portfolio that are going to be consistent with what we've done in the past. But in order to help some of our investors, as far as the our trading goes, that the investors are looking more for some of the daily and weeklies, and so we'll be introducing that in the coming weeks or so. So bottom line is just beware of some of these patterns that are popping up here in sugar with the low in the surge and the low in the pop. I'd expect that those will have some reaction, but they're going to be short-term in term as far as their action and how they're going to affect things, and we'll really be watching the seasonal tendencies of sugar, because it's actually not a bad market to be looking at right now when it comes to the seasonal tendencies, because if we look at the top 10 markets that are seasonally active and following with their seasonal tendencies, and this is obviously historic, but this is something that we're still in with the top 5, and so it's been highly accurate as of late, despite the fact that there's a bit of a difference just starting now between the 5 years and the 10 and 15 years. We're going to start to go into a difference in the phase that we're actually looking at. But sugar should be, I think, a good trade for us, especially on the short side coming into March, and there's still profits to be made between now and then, but you're going to have to be short-term oriented in order to take full advantage of that. So we'll see what does take place. I do encourage you to go back in time and maybe take a look at the sugar deep dive that we did back on the 13th, and we'll continue to look at more and more markets and kind of rehash some of the things that have happened in the past, just to give you a feel for what did take place and how our systems are still trading. So still short for right now, and we'll go from there. Thanks for watching. Bye-bye.